Hello everyone. Today's video will be a significant deviation from videos I've been uploading. It's about investing. This is something I've been wanting to post at some time point. Before I start, I would like to mention that this video is targeted for someone who is very new to investing. The reason for making this video for me is thinking that this video might be beneficial to someone with similar circumstances and investing styles and philosophy like me. So first of all, if you are holding just cash, the cash is losing value every day due to this constant inflation every year. So what should I do then? Well, we should invest, but where is the problem? Stock market, if you give enough time, will return roughly 7 to 10% every year constantly. The key here is that you have to give enough time. So I guess stock market is a good option for investing, but I don't know anything about stocks, so where do I start? Which company should I buy? You can still invest in stock market in a sensible way without knowing any of these. And my short answer to this is beta investing. So there are two sides of investing. One is alpha and one is beta. Alpha investing, as you can see here, these are professional traders or fund managers looking at the screens with all the charts, actively searching for trying to gain more than the stock market in whole. That is called alpha investing. The opposite side of investing is beta, and you are just expected to get what the market earns. So what's the conclusion here? If you believe that capitalism will last long enough, the most sensible way to invest as an ordinary people is buying the stock market in whole, and not just large stocks. You should buy every stock, and not just US stocks. You should buy every country's stocks, because in my mind, I cannot guarantee which type of stock is going to be doing well. I cannot guarantee which country is going to be the most booming market in the future. I use ETFs, so I'm going to focus on ETF here. This is one example of ETF buying the entire US stock market, called VTI. It stands for Vanguard Total Stock Market. In one share of VTI, you're getting over 3,000 US stocks. If you buy one share, you're basically buying over 3,000 US stocks together in one basket. And this is based on the market cap. So the weight, how much you put into individual company, is based on the market cap. So within this over 3,000 stocks, you'll have large companies like Apple, Microsoft, or Google, and you'll have like smaller companies, like mid-sized company and smaller companies like startups. But you're buying all of them, but you're putting more money into Apple, MS, and Google, and you're putting less money into the small stocks because they're market cap weighted. ETF stands for exchange traded funds. You can it is just like stock. You can sell or buy anytime, any amount, and there are ETFs with every combination to your likings. And not just stocks, there are ETFs for bonds, golds, commodities, and other asset classes as well. The advantage of buying ETF is that because you could sell and buy anytime, it has superior liquidity. You're getting superior diversification effect. And I think this is the most important thing. Compared to what it achieves, it has extremely low expense ratio compared to other actively managed mutual funds. Okay, then let's put all our money in ETF. I did say that stock market will increase over time, but along the way, it's really a bumpy and rough road. So you never know what kind of events is waiting for you. So ups and downs of stock market makes it really difficult for beginners, because I personally think I don't know where I am right now. You have to be prepared if you're investing in stock market to handle this kind of drop, like 30 to 50% drop. You have to make sure that you have enough time to recover. That's where the rule number one in investing comes in, which I think is don't lose money. That we should focus on not losing money rather than making more and more money when we're just starting to invest. And the best way to not lose money or minimize the money that we lose in stock market is not putting all your eggs in one basket. It's a famous quote. Even if you're buying diversified numbers of companies with ETF, you're still putting all your money, your eggs, into one basket called stock. So you have to prepare multiple baskets So this is called different asset classes. They're different asset classes because they move in different directions depending on the economical situation. So then there's a holy grail of investing, buying different asset classes that has low correlation to each other. The bottom line of this chart or graph is that the more higher the number of asset classes you're gonna hold, so more diversify your portfolio and less correlated between those asset classes gonna be, you're gonna get less volatility or less standard deviation of your portfolio. So reducing this volatility is really important because that is what makes the sustainable portfolio in my mind. Let's take a look on correlation between different asset classes. You have to mix in these kind of asset classes with really low or even negative correlation ratio. An all-weather portfolio, I like it because it carries concepts like asset allocation, passive investing, beta investing, risk parity strategy, meaning you're holding a larger amount of asset classes with lower risk and you're holding less amount of asset class that has higher risk. So they are really well balanced to kind of complement each other. So this is the final conclusion of my video. No single investment style or trading style can fit or satisfy every people. In the next episode, I'll actually share my portfolio and what kind of ETF I am buying and investing. So thank you for watching and see you next time in my next episode of All Weather Investing. Thank you everyone.
좋아요, 구독해주세요.